And then we had limited companies for 6 months altogether. So we are basically going to determine the taxable income for partnership for 6 months, then limited company for 6 months, altogether. So taxable income is basically determined separately. That is what you're saying. Is that point noted? Is that first point noted? We give it a yes if it is noted. If that first point is noted, perfect. So how do we determine them? We determine them separately, and we say that the taxable income of the limited company using, we have the word using, the gross profit. We call it using the gross profit only. We need to, the taxable income, we say of a limited company using the gross profit only. Even if the accounting of limited company, even if the accounting, even if the accounting, we say profit, even if the accounting profit is, we say is provided. So the taxable income for a limited company, we basically use the gross profit method altogether, unless otherwise stated, unless the examiner says, unless otherwise we say stated. That is the first point, that point. So I hope that first point is put at home together. But now I want to come up with the second point. When we are now converting, I say that payments that are directed to partners are non-allowable. When you convert them to a limited company, they become directors. Now it becomes allowable. So we say that any partners, any payment, we say to partners, we call it under partnership. Any payment to partners under partnership, i.e. salary, commission, just name a few, etc. We say are treated as non-allowable, So any payment that is directed to partners, salaries, commission, etc., we just name two, those are treated as non-allowable. Then we say that, however, we call it upon conversion of what we call of a partnership to what we call to a limited company, upon conversion of partnership to a limited company, we put in by bracket partners become what we call directors. And we now need to understand that payments, we now need to understand that payments to them becomes what you call allowable. And then you can have e.g. directors, salaries, etc. I hope this point 2 is also very clear. Is that point 2 clear? Together. So the third point, taxable income of partnership is taxed on what we call on partners. So the taxable income of partnership is taxed on partners, and you say it's basically taxed on what? On what you call on a graduated scale. On a graduated scale. Same as employment. What about limited company? Well, now we turn it to a limited company. How are we going to tax it? Well, now it becomes a limited company. How do we now tax it? How do we basically now tax it? How do we tax it now? We tax it now at corporate rate. corporate rate of 30%. That is for resident company. At corporate rate of 30%, and that is for a resident company. With exceptions to which year? With exceptions to the year 2020. What was the rate of taxation in the year 2020? Exceptions for the year 2020 when it was 25% due to COVID measures to cushion the citizens. Are we together? Then lastly, so when companies formed, look at this. When companies formed, we say is formed. When a company is essentially formed, a number of things happen. What is going to happen? Are we together? When a company is formed, a number of things will happen. There's what we call issue of shares and debentures. Issue of shares and debentures. So these are the sources of what do we call them? Sources of funding for the company. Together, issues of shares and debenture. These are what we call the sources of funding for the company. Are we together? So whenever we issue shares, there's what a cost that we incur. Cost of floating shares, and then in this it will incur what's called a debenture interest. We call this a debenture interest. Together, these are means of financing. So we can finance using shares, or we can finance using what's called debenture. And when we're financing using shares, we have a cost that we incur, which is called the cost of floating shares, and this will incur what's called a debenture interest. Together, team, we will incur a debenture interest. How do you treat them in relation to a company? How would you treat those costs? How would you treat those costs? At the back of our mind, we treat them as allowable. We call them allowable expenses. We will treat them as allowable expenses. Those costs are allowable expenses. I want to mention something. Once we understand that, those costs are allowable expenses. Together. Give me a yes if together. Those costs are essentially what we call allowable expenses. But point to take into notice. When you see those costs under conversion of what we call, when you see those costs under conversion of what we call a partnership to a limited company, you will automatically at the back of your mind outrightly know that those costs goes to what? They will be for the limited company. Those costs will not be for the partnership. For the partnership, those costs will essentially go to the limited company because those are only costs that incurred in formation of a company. Tumeelewana? We respond with a yes. So I want us to pick illustration. I want us to pick an illustration. For those who are new, there's a number of things that we did in complete records. Taxation of investment allowance. We did investment allowance. We did taxation of investment income, and we did the incomplete records, that is for partnership and a limited company. So I want us to pick our first question as pertaining. We'll do the first question that is basically on conversion of a limited company, conversion of a limited company, conversion of a partnership to a limited company, conversion of a partnership to what it called to a limited company. So the question is August 2024. We'll take on the first question. That is August 2024. We have it as August 2024. That is question. We have it as question 2B. Question 2B. Open that question, send that question. August 2024, question 2B. Do we have the question? How many minutes to get the question? How many minutes so that that question can be gotten? How many minutes? How many minutes? How many minutes? Who is our representative? Rich, how many minutes you get that question, then we start? 2 minutes, get that question, then we start. 2 minutes, we get that question. Then we start on that question. 3 minutes, get that question done very fast. And sorry for taking your time. I think there was an issue with our link. Sorry for taking a lot of time for you people. All of us, if you're there, then we respond with yes. If you are ready, then you umwambia mwalimu we proceed. If we are ready, then we can proceed. So perfect. Asante Joy. So then we look at question 2B. The examiner tells us one is that Paley and Mark. Look up Paley and Mark. Paley and Mark have been in partnership, trading as Pama Limited. Have been in partnership. We have Paley and Mark, we call it P. P and M have been in have been partners trading as Pama Limited. From 1st January 2021, having contributed a capital of 12 million. That is, Paley contributed a capital of 12 million. Then we have Mark contributing a capital of 15 million for Paley and Mark respectively together. So these individuals have basically been in partnership from 2021. Information of that partnership, each contributed a capital. Paley contributed a figure of 12 million and Mark contributed 15 million together. Information of that partnership. So then we're being told that as capital for Paley and Mark respectively, they prepare the accounts to December 31st each year. So basically the accounts end as at 31st December of every year together. The accounts basically end as at 31st December of every year. So then we are being told that due to the need of expanding, that as a result of the need to grow the business, that is what we call expansion, their business, they decided to admit colony. They decided to admit colony on 1st May 2023. So due to need for expanding, these people decided now to introduce the third partner. So we have Paley, we have Mark, and then we have the last that we call Coley. Are we together? And when it was Coley introduced, that is on 1st May 2023. Is that noted? On 1st May 2023. What has been shared, Sain, in the meeting? What has been shared? I hope everybody's okay. Is there an issue? Is there an issue? There's no issue. Perfect. So they introduced the third partner, who was Colney, but they introduced it on 1st May 2023. Are we in agreement? Kama tuko pamoja tubonyeze yes. That is good. Past paper is okay if you've done that. That's good. So that was basically on 1st May. And the partnership business changed to Pama. Instead of Pama, this was basically called Pama. This now changed to what's called Pama. These are the first questions, so we have to build it. Based on my explanation, this is one of the most compulsory questions on advanced tax. But remember, it takes a lot of time. Are we together? This question particularly takes a lot of time. Are we together? But as I will be teaching, I will also be teaching you on how to simplify these questions on partnership. So it was basically introduced on 1st May 2023 and changed the name of business to be PAM altogether. As it was introduced, it brought in, now this person only brought in a capital of what it called 18 million. You just note it. It brought in a capital of 18 million. Together, it brought in a capital of 18 million. Together, Raphael, that should be okay as this capital contribution. Then you say prior to the admission of Colney, the profit sharing ratio was 2:3. So this first part where we had Peli and Mark, the profit sharing ratio was 2:3, meaning Peli was getting 2/5 and Mark was getting 3/5. Is that noted? 3/5. We respond with yes. What is the essence of this? This assists us in what? In income allocation schedule. Income, we'll call it income allocation, will assist us in the income allocation schedule. This information for the first 4 months when you're distributing income, because for the first when they were alone, it will assist on that. However, with the introduction of Colney, the profit sharing ratio, they revised the profit sharing ratio. We have Peli, we have Mark, and then we have Colney. The sharing ratio now became 2:3:4. So what was Peli getting? Peli was, the total ratio is how many? What is the total ratio? The total ratio is 9. So now Peli gets 2/9, Mark gets 3/9, and Colney gets 4/9. That should be very clear together. So we come to this other part, that is additional information. We come to the additional information. So the examiner tells us something. The following information was extracted. The following information was extracted. The following information was extracted. The following information was extracted from business records for the year ended 31st December 2023. So we have payable at the beginning of the year, that was 7.2 million, rounded to 1,000, so we have 7,200. We have, at the end of the year, we have 11,050,000. Then we have the accrued wages. I hope you're seeing. At the beginning, at the beginning of 2023, we had 1.6 rounded to 1,000, that is 1,600. At the end, we had 2,300 rounded to 1,000. That should be 2.3. Then we have what you call accrued rent. Well, that was 1,825 at the beginning. At the end of December 2023, it was 2,100,000. We had accrued electricity. The figure was 293,000 at the beginning. At the end, it was 245. Then we had furniture and fitting. Those were assets. At the beginning, it was 600,000. At the end, it was 450. Let's say, for example, I asked the question: if there's no additional information, you have furniture at the beginning was 600, and at the end, we have those furniture to be 450. If there's no additional information to explain anything, what do you think is happening? So December 2023, what could be happening to furniture and fitting? Because this is, how do you comprehend? Suppose there's no additional information to explain anything. That is depreciation. That is essentially what's called depreciation. In tax, do we allow depreciation? In tax, do we have an expense called depreciation? In tax, we do not have depreciation. Instead of that, we are going to claim investment on the value at the beginning of the year. We are going to claim investment allowance, which is wear and tear, on the value at the year. I'm saying if there's no additional information, disposal is not there, Kotuga. Kotuga, if there's no additional information, meaning there's nothing like disposal. Are we together? Then essentially, it basically means that that is the deposition. Kotuga tumeelewana? Perfect. But I'm saying, I'm coming back and saying, the figure that we have, so the difference between this and this, we have a figure of 150. 150 is deposition. But when you're looking for investment allowance, we are going to claim investment allowance, that is the wear and tear, at the rate of 10% on 600, not for 50. Is that noted? Robert, Benson, Henry, perfect. That should be perfect. So that was just a question on that. Then we have the next, what to call, we have balance at bank. Balance at bank. That is at the beginning. That was a figure of 7,910,000 rounded to 1,000. That should be 7,910. At the end, we have a figure of 9,566,000 rounded to 1,000. Then equipment at the beginning, we have 670, we have 530. Again, if there's no additional information to indicate disposal, we understand that that is deposition. Are we together? That is deposition. Tumelewana. Are we together? That is deposition. Together, if there's no additional. Equipment falls under which rate of wear and tear? Equipment will fall under which rate of wear and tear? When you say equipment, it will fall under wear and tear at the rate of 10%. At the rate of 10%. Remember, equipment will fall under wear and tear at the rate of 10%. 10%. Then the last information we have, the inventory. Inventory, the 1248 is the opening inventory, and 897 is the closing inventory. Is that noted? Is that noted? 1248 is the opening inventory, and 897 is what we call the closing inventory. Tuko pamoja is the closing inventory. We respond with a yes. Perfect. The opening inventory and the closing inventory will assist us to determine what? The closing inventory and the opening inventory will assist us to get what? The cost of goods sold. The cost of goods sold. It will assist us to get what's called the cost of goods sold. Hapo imeeleweka. Opening inventory and closing inventory will assist us to get the cost of goods sold. Have we wrapped it on that? If that is understood, perfect. Then I want to talk about a number of things. Payable. Why do you think we have payable? It basically means that we have incomplete records. Are we together? We have incomplete records. And payable accounts assist us to get what we call total purchases altogether. When you have payable at the beginning and payable at the end, it assists us to get what's called the purchase account. Total purchase, we've said, is equals to cash purchase plus what we call the credit purchase is equals to the cash purchase plus what we call the credit purchase is equals to cash purchase plus credit purchase. So the item that we have payable at the beginning is supposed to assist us to get what we call total purchase altogether. And essentially, this payable is assisting us to get what we call the credit purchases. Together, Karaja is assisting us to get what we call the credit purchases. Together, we respond with a yes. Perfect. Again, accrued salary. Accrued salaries and wages, accrued rent, prepaid rent. Prepaid rent is going to assist us to get what we call incomplete records on expenses for the year. Number one is salaries for the year. Are we together? Incomplete records on salaries and wages. We have what we call accrued expenses. That is expenses for the year. Then we have electricity, which will assist us in complete records to get salaries for the year. So we come to additional information number two. I hope one is satisfactorily sorted. So I get to additional information number two. Is one sorted? This is the first class for calculation. So it's okay. We take it a little bit slow. Are we together? We are not in a hurry. This is the first calculation class so that we just want people to absorb. Once you absorb it, it's very important as we move to the next. So we look at during the year, During the year ended 31st December 2023, partners banked all the cash collection after deducting. Banked all the cash collection. Banked all the cash collection after deducting the following. Banked all the cash deduction after deducting the following. Number one, we have repairs, monthly expenses. So look at this. So during the year ended 31st December, partners banked all the cash collection after banked all the cash collection after deducting the following monthly expenses. So repairs and maintenance, is that allowable expense or non-allowable expense? Repairs and maintenance. And maintenance. Is that allowable or non-allowable expense? That's allowable. Remember that figure is monthly. We round it off, that figure is monthly, so that should be 20 times 12. What is the whole year? Are you saying during, after deducting the following monthly expense? So what is the repairs and maintenance for the whole year? Those were monthly, Jama. What is repairs and maintenance for the whole year? Repairs and maintenance for the whole year. What is the repairs and maintenance for the whole year? Multiply by. Round it to 1,000. Remember, they're not rounded to 1,000. Why do I have it as 20? I round it to 1,000. Then I multiply by 12. So that's 240. Understood? Is everybody with me? So that's allowable expense. So the next, rounded to 1,000. Remember, the figures are not rounded to 1,000. So you round it to 1,000. So we have it as 240. Then you have stationery. Is stationery allowable expense or non-allowable expense? Stationery. Is stationery allowable expense or non-allowable expense? That's allowable expense. So monthly, we are having a figure of 27.7 rounded to 1,000. Then we multiply by 12. What is the total for the whole year? Per annum. This should be per annum. Yes, it's allowable per annum. Per annum, we have 284.4. Yes, 284.4. Then we have the next. We have what call sundry expenses. Is that allowable, sundry expenses, or non-allowable expense? That's allowable. So sundry expenses, I'm having a figure of 32. So I'm having 32 times 12. So for the whole year, what is the figure for the whole year? That is 384. For the whole year, we have a figure of 384. We have a figure of 384 for the whole year. We have a figure of 384. So the next we have what's called motor vehicle expenses. There's a difference between motor vehicle and motor vehicle expenses. When I say motor vehicle, is that allowable expense? Suppose I said motor vehicle. Is that allowable expense? Suppose, let's say, for example, I said motor vehicle. There's a difference between motor vehicle expenses. If I say motor vehicle kaburu, would that be allowable expense? If I said motor vehicle, purchase of motor vehicle, that would be non-allowable. Why? Because that's a fixed asset. However, when you say motor vehicle expenses, Samikis, then that becomes allowable expense. So motor vehicle expenses, that's allowable motor vehicle expense, that's a figure of what they call motor vehicle expense. That should be 20.5. Then we have it times 12. So what do we have? 20.5 times 12. What do we have? 20.5 times 12. So we have 246. Perfect. All of us, we are perfect. Then I will teach you what to do, because this question, some people take long in this question. So we must craft a way of simplifying partnership. And we'll also be able to do one of the questions that I've prepared, the 3 questions that I'm doing in partnership. I'm also doing the August 2025. Is that noted? August 2025 partnership. I will also be doing that question. So then we have the next, we have purchase of goods for resell, purchase of goods for resell, purchase of goods for resell. So what is that? Purchase of goods for resell. Don't say in an allowable. And what is that? Purchase of goods for resell. That's the cash purchase. That's the cash purchase. Tuko pamoja? That's the cash purchase. Cash purchase. Tuko pamoja? Cash purchase. This will assist us to get the GP. That is a cash purchase. Are we in agreement that that is a cash purchase? Are we in agreement that that is a cash purchase? Tuko pamoja? That's a cash purchase. So the cash purchase is a figure. So we're going to have a figure of 190 times we have 12. What is the figure of 190 times 12? So we have it as 2280. So back to additional information number one. Look up. Back to additional information number one. Back to the additional information number one. Let me adjust the camera. Back to the additional information number one. Back to the additional information number one. Back to what we call additional information one. So on the additional information one, with the incomplete records, that is the payable, we are able to determine what we call the credit purchases. Remember, when I'm looking for total purchases, I say that total purchases, I will say that the total purchases is equal to what we call the cash purchase, plus what we call the credit purchase, plus what we call the credit purchase. This one, I already have that. Tuko sawa? I already have the cash purchase. So what am I looking for? I'm looking for what we call the credit purchase. I'm looking for what we call the credit purchase. We call it the credit purchases. I'm looking for what we call the credit purchases. I open what we call creditors. Creditors, we call it the creditors, so what we call the payable account. We call it the creditors, so what we call the payable account. Tuko sawa? We open what we call the creditors, so what we call the payable account, payable accounts. We open what we call the creditors, so what we call the payable account, creditors, so what we call the payable accounts. Together. Are we together on that? Are we together? Perfect. How do I treat the opening stock balance breakdown? How would I treat the 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 balance breakdown? Balance breakdown, payable, balance breakdown. Is that an asset or a liability? Is that an asset or a liability? We credit why? Because it's a liability. So payable balance breakdown, we credit, and the figure is how much? The figure is what I call the figure is 70. The figure is 72. So where do we take the balance carried down? We debit. Is that payment to creditors? I've been told that there's a payment to creditors. Have we been told that there's a payment to creditors? Yes, we credit that. Is there payment to creditors? Is there a debit not received that we need to? We don't have our ticket. So we are just going to credit. We credit the balance carried down. So what is the balance carried down? Balance carried down in Gapi? Somebody to give me so that we just enjoy. Who is giving me? Henry. Give me that. 11. And up to this point, we say that learners should be very keen. Learners should be very keen. Is there any payment? If there's a payment that was made, if there's a payment that was, we say we were given payment payment to creditors. Where would you have put it? Gitao. For those who attended in complete record, I know they know. If there's a payment made to creditors, do we credit it or debit it? It reduces so that one would have debited. We would not credit, we would have debited altogether. What about discount received? Discount received. If we had discount received, we would have done what? We would have debited or creditors. Discount received, my team would have debited. What about no credit with debit? What about when you have debit note received? Debit note received, another cast would have credited. But in this case, we do not have. So the balancing figure is 11,050, 11,050. So what were we looking for? I was looking for credit purchases. So I have what we call our credit purchases. We have our credit purchases, and that is the balancing figure. So what is the credit purchase that we are looking for? So the figure is 38. The figure is 38.50. Tim, I know that this question normally take a longer time, but I will tell you what to do when you have this question and you realize that there's no time. I will tell you, what do I do? Do I get this? If I don't understand this, how do we do it? That is something that we must be. I will teach on what to do. Is that okay? We will definitely teach on what to do. You give me a yes if you're together. Perfect. So then we come here. We understand, but don't rush. Are we together? Don't rush. Don't rush to get the total purchases. Apart from this cash purchase, don't rush. We read the question fully. Tuko pamoja. Don't rush. So we move to this. Payment made through, we are told that payment made through the bank, during the year ended the 1st December 23, have been summarized as follows. Rent. So rent is how much? Rent during the year, that's annual. So is it allowable expense or non-allowable expense? Rent, is it allowable expense or non-allowable expense? That's allowable. However, look at him. Thank you, it's allowable expense. Look at how I'm doing this. This is not the approach that you people should take when you're doing this for you. Are we together? This is for learning purpose. I repeat, this is for learning purpose. Are we together? Together, this is for learning purpose. So I can do the second working approach. How do I get in a question? You just do them. We call it rent. Is there any accrual? Is or prepayment for rent? There's accrued rent. Yes, so we have an incomplete record. The shortcut that I gave those who were in class, we say expenses paid plus, we call it accrued, carried down, that is at the end, minus what we call accrued brought down. Did I give the logic on this? To get rent for the year. This is to get rent for the year. This is to essentially get what rent for the year. Tuko sawa. Did I explain the logic behind this team by drawing the T format? Those who are in class and those who are to join us. Those who are new, you can join us together. You'll have the videos for this, for those who intend to join us based on how they feel after this class together. So there was something that we did. Do we remember this? Kaburu, Karanja, Alfile, do we remember this? So what is expenses paid in terms of rent? In terms of rent, we have 22. We have 22.50. What is accrual carried down? Accrual carried down. The figure for the accrual carried down. Accrual carried down. Accrual carried down. So that's 21. We say plus 21 minus accrual brought down. That is 6 rent. That should be 1825. So what is the rent for the year? Rent for the year. So what is the rent for the year? Give me the rent for the year. What is the rent for the year? So that is 25, 25. 25, 25. In an exam, don't do working separately. Show it. Are we together? You say rent, chini ya rent, unaeka hivyo, you show it in an exam. In an exam, don't attempt to do working separate. Chini ya hiyo rent expense, just say 2250 plus this minus this, then you give the entry. So the entry that is right is this entry. Is that at home? The figure, I hope the figure is at home. So then I move to the next. I move to the next thing. I have done the rent. I hope you don't need that. 25. So the next, we're being told that motor vehicle expenses. Motor vehicle expenses. Is that allowable? Motor vehicle expenses. That's allowable. Expense. That's for 20. Add it to the one that was paid in cash. How much was paid in cash? We had motor vehicle expenses. How much was paid in cash? That's how much was paid in cash to get for the whole year. Up there was a figure that we had done. So that's the next. How much is it? And once I get those things, I'll just run the partnership and we have it. How much was that? The one that's additional information number 2 plus 246. 246. So for the whole year, what was the motor vehicle expense? That should be 6. Very interesting. 666. Is it 666? That is triple. Is it 666? Okay, that's very interesting. Then you have the next web hosting. Web hosting. Is that allowable expense when you say web hosting? When you say web hosting, is that allowable expense? It's not designing a web, but you say web hosting. Is that allowable expense? Web hosting. Web hosting, is it allowable? Or non-allowable expense? Web hosting is different from designing a web. I'm asking team, web hosting. It is not designing a web, but you're saying we are hosting a web. That's allowable expense. Allowable expense. That's an allowable expense. So then the next we have what's called director's allowances. Director's allowances. I want my students to be keen. Director's allowances. That's allowable for what? Angalia, this allowable for limited company. Even if I don't read, look up. That question is beginning to tell me what is happening. Have you been told of any conversion? Have I been told of any conversion? I have not been told. But the moment I begin, you didn't understand the 246. So look up Portugal. Additional information number 2. Unipatia yes tafadhali. You encourage Mwalimu by giving Mwalimu a yes. Additional information number 2. Portugal additional information number 2. Additional information number 2. Just give a yes. Additional information number 2. Perfect. So we've been told that during the year ending 31st December 2023, partners bank all cash collection after deducting the following monthly expenses. The following monthly expenses. So motor vehicle expense per month was 20,500, but we rounded it to 2,000. We rounded it to 2,000. So that was 20.5 per month. Then we multiplied by 12. So 20.5 times 12, Kotuga, what is the figure? 20.5 times 12. 20.5 times 12. That is how we got 2.6. Are you now at home? Yes, are we now at home? I hope that should be okay. So then I come to director's allowance. So I'm telling students that this is now where a student needs to be very keen. The moment it started with a partnership, now I'm seeing director's allowance. What is the examiner basically trying to tell me? It started with a partnership, telling us there were two partners. Another partner came in, called me. But in expense, the examiner begins to tell me there's director's allowance. So what does it give me? The questions has to give me a vibe that there's conversion. There's a vibe that is coming, and the vibe is basically telling us that there's an aspect of conversion. Perfect. So it's allowable expenses, but allowable expenses related to company, not partnership. It's allowable expense, but allowable expense related to what we call to a company. Yes, then we have the next, what we call general expenses. General expenses, that allowable expense. General expenses. General expenses. Is that allowable expense? Give me allowable, non-allowable. Did we discuss these things? Yes, we did. That was the basics in taxation. It's allowable. Kotuga, you can't say general expense unless there's additional information saying contrary. Unless there's additional information to tell you general expense was this and this. But general expense is allowable expense unless there's additional information basically saying something that is contrary. Together, Kotuga. Perfect. So then we proceed to the next. We have what we call electricity. Electricity, there's definitely a working. So we have electricity. Electricity for the year. What is the figure for the electricity that was paid? So electricity, I have a figure. Electricity, I have a figure. A figure of I have a figure of 1800. What do we have for electricity? Is it prepayment or accrual? Is it prepayment or accrual? Prepayment. How do I adjust prepayment? If I have prepayment, we basically say that expenses paid plus, we call it prepaid, brought down, minus prepaid carried down. Do you understand the logic behind this? I know for those who are in class, do you understand what Mwalimu is doing? If I was to draw a T format, logically, we just summarizing what is in the T format and using double entry. Prepaid expenses is an asset. So we have prepaid brought down. We are going to debit. When an expense is paid in terms of double entry, we debit expenses paid for the year, we'll debit, and we know that prepaid carried down, that is prepaid carried down, that is a credit. So when you have such a figure, we'll look up. So what are we looking for? We call it in an income statement, and this will be an expense for the year, expense for the year, expense for the year. That is the balancing figure. So if I have this, I'm simply breaking it down. If I have this and I'm looking for expenses for the year, I know and I have prepayment. I know I'm adding prepayment brought down plus expenses paid, then unless prepayment carried down. Is that understood? Tafadhali. Those shortcuts, is that understood? Kaburu, is it that understood? Perfect. So then I just come and put the figure. You don't need to come up with the T format. You only just need to pick it very fast. So the figure that was paid was 1800 plus prepaid brought down. That is 293 plus minus prepaid carried down. I have it as 245. So what is the electricity for the year? So what is the figure for the electricity for the year? Electricity for the year. And I've said in an examination, please do these things in what? On the question. Sign. In an examination, usifanye hiki tunafanya hapa. These things, you say electricity na chini yake unaandika hivyo and you get the entry. Is that okay, Lois? When it comes to questions, this is for education purpose, for learning. So when it comes to examination, you do the entry chini ya some electricity, maybe kando yake or chini yake. You just get that entry by understanding this. Is that okay? Don't do that working separate. Tuko sawa? Is that noted? I'm not seeing anybody responding. So the next we have what called purchase of goods. We have what called purchase of goods. So I can now come back, purchase of goods. I'm given purchase of goods. And that is a total of 52,640. So remember, I did say that total purchases, team, I did say that the total purchases should be equals to, total purchases is equals to cash purchase plus what you call the credit purchases. So we have these figures to get the total purchase. The one that was through the bank was 52,640. Another cash recording up in from our working. The other cash is how much to get the total purchases? Then the cash was 2280. We have it as 2280. Then plus credit from our working. What is the credit? The credit ngapi? 3850. So what is the total purchases for the year? So we can have summary. Sioni, I'm not able to see that figure that I'm being given. So what is that figure? What is that figure? So 5877. So this is the total purchase. This is the total purchase for the whole year. So I move to the next. We have what we call flotation cost. Flotation cost. Flotation cost. Flotation cost. Flotation cost. When you say flotation cost, what are we saying? That again tells me something. What is happening? Flotation cost can only occur when there's a company. When you're issuing the shares. So that is definitely conversion. Are we together? What I see there is what we call conversion. So that expense is allowable, but allowable for what? For the limited company. That expense is allowable, but simply allowable for the company. That expense is allowable, but simply allowable for the company. Then you have what called salaries and wages. Remember, you must also take in note. If there's salaries for the partners, then that's non-allowable. And that should only go to the income allocation schedule. Are we together? However, the examiner has not told us salaries to the partners. So we just come here and get the working for the salary. So how do I adjust salary? Salary, there's accrual. So I understand that expenses paid, we have it as expenses paid plus accrued carried down, minus what we call accrued, minus we have the accrued brought down, minus what we call the accrued brought down, minus what we call the accrued brought down. So what is the salary for the year? What is the salary? How much is the salary? The salary is 83. Is there anything that was paid in cash? Salary is 83. What is accrued carried down? Somebody to give me the accrued carried down for the salary. The accrued carried down. That should be a figure of 23. So then we have accrued brought down. What is the figure for the accrued brought down? That is a figure of 160. So what is the salary for the year? Once we analyze that. What is the salary for the year? What is the salary for the year? What is the salary for the year? So adjust that and give this salary for the year. That is 9. Then we read the next. Purchase of saloon car, 4.5. What do I do with that? Purchase of saloon car. Is that allowable expense? Is that allowable expense? Purchase of what we call saloon car. Is that allowable expense? Purchase of what we call saloon car. Is that allowable expense? What are we going to claim? We are going to claim investment allowance, but not something. Munaona kitu kwa hiyo swali. Look at that saloon car. Angalia hiyo saloon car. Good students. Circle that saloon car. Is that something strange? We need to restrict to 3 million. We need to restrict it to 3 million. We need to restrict it to what we call 3 million. We need to restrict it. So the amount that we're going to take for wear and tear is a figure, not 4.5, but that figure should be rounded to 3 million. Tuko sawa? Are we together? If you're together, we respond with a yes. Perfect, Kotuga. Then I want us to analyze this additional information. Number 4, then we take a small break and come back. So this additional information, be very keen. This additional information, number 4, you'll give me the figures you have. So when I start now, just to put the question down, this is the big one. The big work is on this. Once we finish on this, the other one should be so easy. Yes, this is where the work is. Once this is done, we have completely finished our work. So I want us to read this statement very keenly. So we're told that on question on 4, partnership business was converted to a limited company. Look up. Partnership business was converted to a limited company on 1st September 2023. Stop it there. So we have the whole year. Let's say, for example, this is the whole year. But look at when we had, look at this. The first, remember, when was colony introduced? So we have 4 months. I can denote a 4 months here, and 4 months it's partnership. But this partnership will help you in allocation schedule. It will help us in allocation schedule. Tuko pamoja? It will help us in allocation schedule. So the first 4 months before May, Kaburu, there is essentially 2 partners. There is essentially what we call two partners altogether. But that information, I repeat again, the information that I'm basically synthesizing, that information is important for what we call income allocation schedule. Sinukale, that information that I'm synthesizing is important for income allocation schedule, not the taxable income. Together, income allocation schedule. In terms of admission, that will affect the income allocation schedule, not the taxable income. So then, when I pick from 1st May to 31st August, again, we have partnership. But now this first 4 months, the 2 partners. The next 4 months, we have now 3 partners. We now have 3 partners. Tuko sawa team. I hope we're there. We now have 3 partners. We now have 3 partners. As opposed to intermediate level, we didn't have admission, neither did we have conversion. Are you not in Kotuga? Now we have a number of things on advanced tax. But I will say that this is the question that takes a lot of time, and this question is compulsory. On that tax paper that you're going to do in December, a question that will take most of your time is the partnership. Are we together? This question will take a bit, but we'll also synthesize it. As we do the question, I'll tell you, if you get to this question, Kotuga, if you get to that question, a number, let me mention Sheila. If you get to this question, Lois, Raphael, Joy, Karanja, how do you synthesize this question? So now from 1st September to December, we know that this business was converted to a limited company. Limited company, that was Alma, that was 4 months. Tuko pamoja, that was 4 months. Limited company was 4 months. So I understand again now the expenses that we're discussing. Number 1, expenses directed by allowance and flotation cost. Those expenses fall under the 4th month. Are we together? In summary, if I have to look at this and analyze this, so we have partnership, and limited company. So we have partnership for 8 months, and we have limited company for 4 months. I hope that is at all. So we have partnership for 8 months, and then we have limited company for 4 months. Is that understood? Perfect, if that is understood. So we can have a small break, then come back. We have not finished. We read this. So you're being told, and a partner and partners became directors of a company. Upon conversion, a company issued 8% debenture. 8% debenture. Let's finish this 8% debenture. So what do we have an expense? We have what we call debenture interest. Debenture interest. So we can calculate the debenture interest on this. So the debenture interest, we can get what's called the debenture interest. We can get what's called the debenture interest. We can get what we call the debenture interest. So the debenture interest, we are told to be, we have it as 8% times, what is the debenture? We round it to 1,000, that's 15. But now for the company, how many months? Not the whole year, that is the whole year. For company, how many months? You can't claim it for the whole year. That's 4 months times 4 over 12. So what is the debenture interest, which is allowable expense? So give me that, which is allowable expense. So that is 400. So we can now, with this, I can now take a small break. Munataka break ya dakika ngapi? You tell me how many minutes break do you want? For those who need, we did take a breather. Okay, sawa sawa. So then we come to this. So then we come to this. So the examiner tells us, look up, the examiner tells us, additional information number 5. On average, the business sold goods at a gross profit margin of 30%. At a gross profit margin of 30%. On average, the business sold goods at a gross profit margin of 30%. So we look at this, we can get the cost of sales, cost of what it costs sales. How do you get cost of sales in this? We'll have the opening stock. We have plus purchases, plus minus what you call minus the closing stock. Closing stock. So do you have the opening and closing stock? Do you have the opening and closing stock? Do you have the opening and what you call the closing stock? Do you have the opening and the closing stock? Yes. So we can get what we call the cost of goods sold. So the cost of goods sold, opening stock is 1248 plus purchases. What is the figure for the purchase? We have it 5877, then minus the closing stock, which I have as 897. So what is the cost of goods sold? Give me the cost of goods sold. The cost of goods sold. So the cost of goods sold is ngapi? What is the figure? The cost of goods sold is ngapi? So 59. So all of us, are we getting that? Then now I touch on when you're told the gross profit margin. The gross profit margin is 30%. That is what we call 30 over 100. Tuko pamoja. So if I look at this, I can even use a markup to get it. So if I'm looking for a markup, so look up, if I'm looking for the markup, we have sales minus what we call the cost of goods sold is equals to GP is equals to the gross profit together. So this is 30%. This is what we call 30%. 30%. This should be 70%, and the sales is 100% together. So I can get a markup. Markup is what? Markup would be That should be 30 over 70 together. That is the markup. This is the margin. The markup is that. Together, team. Give me a yes if you're together. If we are together, give me a yes. Perfect. So I can get the gross profit. I can get the gross profit by simply understand that 70% is equivalent to what? 59, 1 to 1. What is the gross profit, which is 30%? Or I can say to get the gross profit, would be a markup times what? Times 59 times 59, 1 to 1. So get for me the 30%, which is the gross profit. So what do you have as the GP? What do you have as the GP? Tafadhali munipatie and you round off the figure. If it has a decimal, round off the figure. Lois, if Lois, 25, 338. So when I have this, I'll get the figure for the sales. What is the total sales? Total sales. I'll get the figure for the total sales. Add that and give me sales. Give me the total sales. Or just get 100%. What is 100%? So get for me the figure for the total sales. Provide for me that total sales. So the total sales is 84,459. Kila mtu ameelewa? If all of us we've understood, we respond with a yes. Together, I want to finish this so that this question, so then the examiner tells us specific provision. Look up specific provision for bad and doubtful debt as of January 2020, that is Jan 2023. Jan 2023 is 8,300. Then we have, while December 31st DEC 2023, the examiner gives us a figure of 34. So what is happening? Remember, it's specific. So either decrease or increase. So in this case, we have what? If at the beginning was this, at the end is this. So what do we get? So we get decrease in specific provision. In specific. So what is the decrease in specific provision? Give me the figure for the decrease in specific provision. So that's 49. Is it a taxable income or allowable expense? Decrease in specific provision, is it a taxable income or allowable expense? For those who have been in class from the beginning and on the basics, is that that's a taxable income, not allowable income, but we call it a taxable income. Taxable, we call it the taxable income. We call it the taxable income. We call it the taxable income. Tubonyeze yes kama sawa. We call it a taxable income. We call it a taxable income. We call it a taxable income. All of us tuko pamoja. So then we've been told that there was no disposal. So if I told that there was no disposal of assets during the year, we treated those things as depreciation. So I can do the working if I like, I can do investment allowance. I can just decide to do investment allowance for the whole year. Investment allowance. I can just decide. I could start with furniture. I just use the value at the beginning. Furniture was 600. I'll say times 10%. That is 60. I can get equipment. Equipment was what? Equipment was 670. Then I say times 10%, I'll get 67. Then I have saloon car. I have saloon car where Ed restricted it. Remember, restricted times 25%. What is this times 25%? Times 25%, what do you have? Times 25%, what do you have, Tim? So that should give me, so that I have the figures already. So Nikuziaka 2 once I finish. Is this part understood, Kotuga? Is this understood, Kotuga? Perfect if it's understood. Lois, I'm saying investment allowance. We claim them on fixed asset. In taxation, we don't claim depreciation, but we claim investment allowance. Depreciation in taxation is treated. We restrict for saloon cars and SUVs. SUVs in Amanisha, sport utility vehicles like the Land Cruiser, BMW. If the value is more than 3 million, remember it was 4.5. So the value that will qualify for investment allowance should not exceed 3 million. So out of 4.5, we'll only take 3 million. Lois Tukosawa. Lois Tukosawa. Lois Tukosawa. Lois Tukosawa. Perfect, Lois. So then we have, there was no disposal, so that's investment allowance. Then you say partners were charging interest on capital at the rate of 10% per annum. So that is going to assist us to get what? Income distribution schedule. So all that will assist us to get the income distribution schedule. To Melawana, income distribution schedule together. So then we are being told that partners' annual salaries, these salaries and executors will be used on income allocation schedule. So I will only need them on income allocation schedule. So when you get to the income allocation schedule, I will need them. Tuko pamoja. Tuko pamoja, all of us. I hope we're together, B. Edema tuko pamoja. I hope Kaburu tuko pamoja. I hope Unduto, Victor. I hope Masi tuko pamoja. I hope Sheila tuko pamoja. Somebody says, Mwalimu explained the 3 million. Mwalimu said, somebody has said Mwalimu Rose, is it not Rose? Rose is okay with Mwalimu. B is okay with Mwalimu. Sain, we are basically saying that for saloon cars, Sain, we are saying that for saloon cars, and what's called SUVs, if the value is more than 3 million, you restrict it to 3. We restrict it to what we call to 3 million. If the value is more than 3 million, we restrict it to 3 million. If the value is more than 3 million, you restrict it to 3 million. Are we together? Saini, imeeleweka? Abdinur, imeeleweka? Perfect. So then, the examiner tells us sales, purchases, and expenses were accrued evenly throughout the year. So what does it mean when you're told that sales, expenses were accrued evenly throughout the year? It means that if we have 12,000, let's say sales, 12,000, it means that every month, if it's accrued evenly, every month is 1,000, every month is 1,000 together. If it's accrued evenly, you apportion it every month equal. Purchases and expenses, unless for those expenses that outrightly relate to the limited company, like the flotation, the venture interest, those ones you're not going to apportion. Those ones you're going to take to the limited company together. So in our next class, the examiner tells us in a columnar format, describe the taxable income of partnership and partner taxable income of partnership, which is PAMAC, for the year ended 31%, and PAMAC Limited, that is for the limited company. So you'll share, when you're doing this in columnar form, you're simply just going to separate these things. We say we'll have partnership, one is partnership here, and then we'll have PAMAC Limited. For example, we write the heading there and we separate. So this one, 8 months, we apportion it for 8 months. This one will be 4 months. This one with performance. So that is where we start. I hope we've enjoyed our class. That is where we start in our next class, and that is on Friday. For those who are joining us today, and we are very many in class, we have three. This is lesson number 7. Is that true, Richard? Lesson number 7. Very well enjoyed. Thank you, thank you. For those who are new, we gave this class for free. So for those who are new, kindly join us if you know, so that we work together. Frida is already with us. Friday, yes. No, we don't include VAT in sales. All forms of taxes, if you are in the previous, check the videos. We say that all forms of taxes, we don't include them in taxable income and allowable expense. Yes. Joy, we have this class Tuesday. We have Tuesday, 8 p.m. We have Friday, for those who are joining us, Friday, we have it 6 p.m. We have Sunday, we have it 2 p.m. 2 p.m. Na sasa tumeakisha moto. So please, if you're joining us, don't miss to join. Lois, don't miss to join us. Lois, don't miss to join us. And also new people, Rose Tafadali, don't miss to join us. Whitney, yes, don't miss to join us. Those who are new, Mercy, if you're new, please. Science question. Kindly repeat science question. Sain, could you just repeat that question? I've already, Sain asked 2 things, you know. Sain asked, why do we use 3,000? I said we restrict it. And Sain asked about water again. There's something that Sain has asked. Yes, Sain has asked about something on, Sain, can you repeat the last one? VAT. VAT is neither included in the taxable income or allowable expense. If tax is VAT, which is a tax is on income, you're basically overstating your income. So you need to less it. If a VAT is, are we together? If a VAT, you can reach Malimo through this number. This is Malimo's number, but we also have official, our college number. That is 0719 451. This is Cpa Odongo. And you can also support Odongo through his YouTube. Yes, you go there and support Cpa Odongo. Senior class, you go there and support Odongo. You don't just support him, you support Focus, but you also support Mwalimu. Thank you so much. Unless somebody has something that is funny. But for those who are new, I think these contacts, you're able to see those contacts. I hope you're able to see. This is the college Focus online college number. So end of the number, if you reach Mwalimu through his number, or that should be assisted. Yes, and join immediately. God bless you, and God bless our class. So in the next class, ni kuweka swali chini. Please, keep these things for me. Keep those values for me. I hope somebody is noting them. Keep them so that when you just come, we finish the question. And I give you the trick. And I also give you the trick. This question can take you 1 hour, 30 minutes if you're not very careful. And I also give you the trick of solving this. The trick for solving this. So we close it there. Unless there's something that is burning that cannot be postponed. But I beg to close it there. I beg to close it there. Thanks. You have never understood that question. Thank you. But today you've understood it. I hope you've understood it today. Yes. Thank you. Thank you. Thank you, Rose, if you've understood it. Thank you. Rose, join us. Don't fail to join us, Rose. Yes.